So how's 2016 working out for you so far? For anyone who invests in the markets, including Canadians, the start of the new year was dismal, with a healthy dose of gloom. The instigator was China. While North America slept, its main index dropped 7%, triggering an automatic shutdown of trading. And whether it was jitters or all-out panic, markets around the world woke up and took a dive too. The TSX fell nearly 300 points before rallying to close down 82. The Dow also ended the day down, and the dollar lost another half a cent to close at 71.73 cents. So is it just one day, just a blip, or is today a sign of things to come? And where has it left Canadian consumer confidence? Renee Filipponi begins our coverage for us tonight. Renee.
In global financial markets, Peter, the new year is definitely starting off with a hangover. The economic negatives that made 2015 so tough just aren't going away. The global market plunge began here. Chinese investors started rapidly selling off stock as soon as markets there opened. The concern was all about growth, or lack thereof.
We saw some manufacturing PMI data showing that the manufacturing sector continues to contract for the 10th month in a row. Certainly bad news, but it's not, world-ending.
The Chinese sell-off triggered global uncertainty that spread. First in Asia, with markets in Japan and Hong Kong getting hit. Then every major market in the world followed suit. The German stock index lost more than 4%. And in the U.S., the Dow had its worst start to a year since 2008. Canada wasn't spared, but the damage here was less severe, due in part by strong showings in oil and gold. All this because China, one of the world's biggest economies, is in the middle of a historic shift from a country investing in major infrastructure and exports to a more consumer and service-based economy. And that's making it difficult for others around the globe, including Canada, who have relied on China's appetite for resources.
China has supplied somewhere between 1/4 to 1/3 of global growth coming out of the global financial crisis. And with the Chinese economy slowing down, it means that the world also has to adjust to lower growth in China.
But it's not just China to blame. Political instability in the Middle East is also playing a role. So are concerns over the slow speed of the U.S. economic recovery and the looming possibility of more interest rate hikes by the U.S. Federal Reserve.
We're coming off a period of softer growth. There's going to be a lot of volatility, and I think 2016 is not going to be different in that regard. We're still in for another wild ride this year.
After a year that sent the Canadian economy into a mild recession, saw a major stock sell-off and a dropping dollar and oil price, the question now, how will Canada weather that wild ride that just keeps on going? Peter?
All right, Renee, thanks very much.